Ever feel like the stock market is some exclusive club you can't afford to join? Think you need thousands of dollars to even get your foot in the door? We're here to tell you you're wrong. You can build a real stock portfolio with real potential, starting with just. Welcome to Money Theory, where finance meets real life stories. We simplify money management, investing, and wealth building concepts through engaging stories, experiences, and practical lessons you can apply in your life. From budgeting tips to investment strategies, each video teaches you how to handle money wisely while keeping you entertained and inspired. Today, we're tackling the question, how to build a stock portfolio with just $100. We're going to follow Sarah's journey, a recent graduate who, like many of us, thought investing was only for the wealthy. She soon found out that's not the case at all. Meet Sarah, fresh out of college, armed with a degree and a mountain of student loans. She was working her first real job, but after paying rent, utilities, and that ever-looming student loan bill, there wasn't much left over. Investing felt like a distant dream. One day, while scrolling through social media, as we all do, she stumbled upon an article about investing with small amounts of money. This sparked her curiosity. She thought, 100, I might actually be able to swing that. Sarah had always been intimidated by the stock market. She pictured Wall Street wolves in expensive suits making complex deals she couldn't possibly understand. But the article talked about fractional shares and ETFs, terms that sounded complicated but were actually quite simple. So what are fractional shares? Imagine you want to buy a slice of Amazon, but a single share costs thousands of dollars. Fractional shares let you buy a tiny piece of that share. With $100, you might own 0.05 of an Amazon share. You still benefit or lose from the stock's price movements, just proportionally to your investment. This is key to investing with small amounts. This was a game changer for Sarah. Suddenly, investing in big-name companies wasn't just for the wealthy. She could finally participate. Next, Sarah learned about ETFs, or exchange-traded funds. Think of an ETF as a basket filled with different stocks or bonds. When you buy an ETF, you're instantly diversifying your investment across a whole bunch of companies. This reduces your risk because if one company in the basket performs poorly, the others can compensate. For example, an S&P 500 ETF tracks the 500 largest companies in the US. With one purchase, you're essentially investing in the entire American economy. Sarah realized this was a safer and easier way to start than trying to pick individual stocks. Okay, so Sarah understood fractional shares and ETFs. Now, how did she decide where to put her $100? First, she opened a brokerage account. There are tons of options out there, so she chose one with no account minimums and low fees. Robinhood, Webull, SoFi, many of them offer these features. Next, she decided to split her $100 between two ETFs, an S&P 500 ETF, ticker symbol SPY, IVV, or VOO, and a total stock market ETF, VTI. These are broad market ETFs that track the entire stock market, giving you automatic diversification. She put $50 into each. Boom, instant portfolio. Sarah wasn't expecting to get rich overnight. Investing is a marathon, not a sprint. She understood the power of long-term investing and dollar-cost averaging. Dollar-cost averaging is simply investing a fixed amount of money at regular intervals regardless of the market's ups and downs. So instead of investing a lump sum of $100 once, Sarah decided to invest $25 every 2 weeks. This way, she wasn't trying to time the market, and she got the benefit of buying more shares when prices were low. Sarah's journey wasn't without its bumps. She saw her portfolio go up and down, sometimes quite dramatically. But she stuck to her plan, remembering that she was investing for the long term. She learned that it's okay to feel nervous, but it's important not to let fear paralyze you. Her biggest lesson? Starting is the hardest part. Once she took that first step, the rest became much easier. and seeing her money grow, even just a little bit, was incredibly motivating. Over time, Sarah continued to contribute to her portfolio, increasing her investment amount as her income grew. She reinvested her dividends, those little payments companies make to shareholders, to buy even more shares. The magic of compounding started to work its wonders. So, what can you learn from Sarah's story? Here are the key takeaways for building your own $100 portfolio. Start small. Don't let the perceived high cost of investing hold you back. $100 is enough to get started. Use fractional shares, invest in companies you admire, even if you can't afford a whole share. Diversify with ETFs. Spread your risk by investing in broad market ETFs. Invest regularly. Dollar cost averaging helps you buy low and avoid trying to time the market. Think long-term. Investing is a marathon, not a sprint. Be patient and stay the course. Reinvest dividends. Maximize your returns by reinvesting your dividends to buy more shares. Building a stock portfolio with $100 might not make you a millionaire overnight, but it's a powerful first step towards financial freedom. It's about building good habits, learning about investing, and taking control of your financial future. Sarah's story proves that anyone, regardless of their income, can participate in the stock market and start building wealth. Don't let fear or a lack of knowledge hold you back. Start small, learn as you go, and most importantly, take action. If you found this video helpful, please give it a like and subscribe to Money Theory for more practical advice on personal finance and investing. What's one stock or ETF you'd invest in with your first $100? Let us know in the comments below. We read every comment and love hearing from you. Thanks for watching, and we'll see you in the next video.